It's time to check your money with your friendly neighborhood advisor. Mike Jennings is a wealth advisor with Brackens Financial Solutions Network, LLC, and a registered representative of LPL Financial member SIPC. How are you doing on this fine autumnal morning? I think this is our first time during the autumn, our autumn edition. Mike, so how you doing?
I'm good. Yeah, it was interesting. It was like last week when we were actually calendar wise when we were in fall and
You
it
mean
was still like
summer?
75, 80 degrees. Just
Yeah.
walking outside. I was sweating and my suit on. I had to take my suit off. And then like it was it not even 2 nights ago, maybe even last night. I think we had a window open and I woke up and the house was cold and it like cold. So yeah, it was pretty quick. So I know that a change like that happening that quick usually comes with the sniffles. So I'm
Yeah.
just I'm just hoping that that doesn't come my way.
So for me, we got basically into our fall activities. We did apple picking and pumpkin picking as
Oh,
well.
nice.
Went to the pumpkin patch. So which the pumpkin patch was interesting because we hadn't done that in many, many years.
Hmm.
So that was nice. That was real nice.
Good, good. Yeah, yeah. We'll get into it. We'll start, but yeah, I just gotta adjust to this breeze outside that's going
All
on,
right.
but we'll
Well,
be
what
good.
else do we have to adjust to? Because what's up on your agenda for today?
We got quite a little bit to adjust to. For those of you that were listening last week, the legendary money maven Vicki Brackens, she gave us an update on the Fed funds, with the Federal Reserve and what they were doing, and the Fed funds buying the rate finally being decreased, and what that means as far as interest rates for everything else. And we of course have spoken about interest rates quite a bit ourselves on the show. But I had wondered, how many people actually knew what all of that meant, and what is the Fed funds rate? What is the Federal Reserve in general? Why are they the ones that are setting the interest rate in the first place? You have to consider that this is a very important thing to not be at least aware of. We all are a part of America, and thus, we are subject to the U.S. monetary policy. And that isn't a conversation that like you hear all the time. That's you're not gonna walk to the barbershop and hear that. You're not gonna probably talk about that at Sunday brunch. Um, so I figured we could come up here and talk about that. Actually, side note, shout out to my barber Lita at Life on the Edge. She's the one that keeps me looking as handsome as I am most days, most days. But she's
As
recovering from
handsome as you are, go ahead, bro.
I said most days. But yeah, she's been recovering the last couple of weeks from a health scare episode. So hope you're doing well, Lita. I should be seeing you tomorrow. But yes, I think as a community, we should be aware of certain things and how they affect us, and just in general how our government works. Because
So you
they're,
want us to
they're
be educated?
yes,
Okay.
educated.
See, I was gonna say that, but I was trying to, I
Yes,
wasn't gonna
that
say that for real. I was gonna
yeah, we
say you
gotta
good.
because they're doing a lot. They're doing a lot. The government is they're on one. And we can expect that for at least the next 4 years. So anyway, let's get into it. Federal Reserve, what is it? How does it work? You ready to dive in, George?
Let's go.
All right, perfect. So, as I mentioned, the Federal Reserve cut the federal rate down by 0.25, a quarter of percentage point, 2 weeks ago at this right now, down to its target range of between 4% and 4.25% interest. But what exactly is the Federal Reserve, and who told them that they can direct interest rates anyway? The answer starts actually over a century ago. So another history lesson for the folks out there. The Federal Reserve was created by the Federal Reserve Act of 1913. Now, before then, banking in the U.S. was basically the Wild Wild West, and it was a lot worse than the Will Smith movie. There weren't really any central body of a regulation for banks and investment companies. And then in 1907, there was a historic banking crisis in New York, which was the financial center of America back then, that it still is today. Um, a bunch of banks failed, a bunch of companies failed and shuttered their doors. The stock market tanked 50% from its previous year peak. All sorts of chaos happening. So then in 1910, there was a man by the name of Nelson Aldrich, who was the chief of the National Monetary Commission. And this was a commission that was created after this whole banking crisis.
Hmm.
He had a lot of influence, and he had some pretty powerful people in his circle, including one J.P. Morgan, who started. I'm not talking about J.P. Morgan like the bank. I'm talking about the man who started the
So, right.
bank, J.P. Morgan, and John D. Rockefeller Jr., who was his son-in-law, obviously of the Rockefellers. Aldrich contacted, these group of people who were all associated with these financial powerhouses, and got them together for this secret meeting, very, very, very secret meeting down in Jekyll Island, Georgia. You ever heard of that? Jekyll
Jekyll
Island?
Island? No.
Yeah, in my previous job, I went down to near Quantico actually. I forget the city name, but it was down near southern Georgia. It's like a little bit north of Savannah. But Jekyll Island is like an hour and a half south of Savannah. But anyway, in the secret meeting, they discussed how they believe that the banking and monetary system of the country should operate. So the report that they put together from this secret meeting was debated upon for like 2 years by the government, and it eventually culminated into what would be the Federal Reserve Act of 1913, with one of the primary recommendations from that report being the establishment of a central bank in the US, which created the Federal Reserve System. A fun fact, this secret meeting that birthed the Federal Reserve System, it stayed a secret until 1916, when a journalist by the name of B.C. Forbes wrote an article on it. And then the next year, B.C. Forbes went on to found Forbes magazine. So a little bit of history there too. So now, at this point, the Federal Reserve mainly acted as literally just the central bank for the country. So what does that mean, right? So controlling the money supply and supervising the banking activity of all the other banks. But of course, we still had economic issues. Obviously, the Great Depression still happened in the 1930s. The federal government still had the opinion that they needed to do more in terms of the monetary policy for the country. So in 1946, the Employment Act was made into law, and that was really the first time the government made clear its goal, goals plural, for maximizing employment, maximizing the production of goods, and maximizing purchasing power for Americans. Now, eventually, all of these previous laws came together again in the Federal Reserve Reform Act of 1977. So they changed the original act in 1977 and really reiterated those monetary policy goals. And that pretty much solidified the Federal Reserve System that we recognize today. So,
Okay.
what is this system? What's going on, right? So the Federal Reserve still acts as or still operates as the central bank of the U.S. by maintaining a reserve of currency, controlling the U.S. Money supply. So those of you out there that are fans of cash, some of you might have some in your pocket. If you take it out and you look at the top, it says Federal Reserve Note, right? That's our currency in our country. They maintain gold for a good portion of the U.S. Possession of gold, but also gold for 36 other countries, and all of that gold is sitting about 50 meters, I think, deep in New York City. Um, and also the bank, as a central bank, it acts as a lender to almost all of the other thousands of banks in our country. So the country has 12. federal banks in 12 districts across the country. So they split the country in 12 different areas, with a federal bank in each one. I'm not gonna ask you. I'm gonna ask you to name all of them, George. But
Well, I
so
can
we have,
name one.
yeah, the one I just mentioned.
No, the one in New York.
That's the one I just mentioned, George.
Oh
That's
yeah,
where all the
yeah.
gold
All
is.
right, there's another one I believe in Philadelphia.
Bingo. You're right. You're right. So yes, New York, Philadelphia, Boston, Chicago, St. Louis, Cleveland, Kansas City, Minneapolis, Richmond, Dallas, Atlanta, San Francisco.
Okay.
Those are your 12 Federal Reserve banks. Now, the Federal Reserve is designed to be self-governing, but it is still a federal entity. So it's independent within the government, but not independent of the government, right? So obviously, a lot of you out there probably seeing a lot of the drama going on between the executive branch, the Trump administration, and the Federal Reserve, sort of them trying to assert their influence on the Federal Reserve, but the Federal Reserve is in control. It controls the money in the country.
So,
It needs to be independent.
all right, well,
Go
but let's put it out there like specifically what is happening right now. So, the president wants to fire one of
ahead.
the
Mhm.
Federal Reserve governors,
Yes,
and um, they appealed to the Supreme Court. The Supreme Court said she can stay for now.
for now.
We'll hear oral arguments in January. And that Federal Reserve governor that they want to fire happens to be Lisa Cook, who is an African American woman. So,
Yes,
all right.
yes, a black woman, the only black woman on the what is known as the Federal Open Market Committee and the Federal Reserve Board, and one of
Is she a
two.
governor or no?
Yes, she's a governor.
Yes, yeah,
She's
of the board,
also
not a like,
of
yeah,
the not of a state, the
right, right,
governor of
right, right,
the
right,
board. It gets confusing. We're gonna
right,
get
right,
into
right,
it.
right, yeah. But but
But
but I
yes,
wanted to
she's.
put that context in there to your point
Mhm.
about supposed to be independent, and this is the first time that we've seen this sort of
Exactly.
intervention, at least in our recent history. It may have
Mhm.
happened in the past, but not in recent history.
Yeah, yep. So, yep, Lisa Cook, like you said, she's the only black woman on the whole committee, and one of two black people overall on the committee. But yes, unprecedented is the name of the game, and that's what it will stay for
Yeah,
the
and
near future.
just one more thing, the
Hmm.
reasoning, I'm just giving you the from the background. The
Yep.
reason is that they're saying that she listed a house on a mortgage application as a primary, like it's what something
It
to that effect.
that it's so that's his that's his catch-all sort of thing. He tried to do the same thing with Letitia
James,
James,
yeah,
Attorney General of New York. Listen,
we're
I,
just stating the facts, right?
yeah,
This is
we're just stating the facts. It just happens. We're noticing a
right,
little
right,
pattern.
right, right,
That's
right.
all. That's all we're doing. So yes, the Federal Reserve, it operates on a policy known as the dual mandate. All right, here we go, George.
Okay,
All right, ready? So,
right.
George, do you know what the two goals of this dual mandate is?
Mm,
All
I have no idea, but of course, that doesn't mean that I'm not going to take a stab at it.
right. Mm-hmm.
um, because I think you've indicated some of it, like I think you've explained some of it already.
Yep.
So I'm just going to try to see. This is like if you were giving a lecture and you gave the answers already, but
Hmm.
can I pick up what those answers are?
That's it. There you go.
So I would say one of those things, since I heard you, would be to set monetary policy. I would say would be set policy, or at least, well, anyway, that's what I was gonna say. And then the second thing I was gonna say is to um well, you said to be the central bank to protect consumers, and I'm gonna go with a third thing because I'm trying to get two out of three. Um I was gonna say to control inflation, but I don't know if it's control inflation, but to monitor inflation. Anyway, that's what I think.
I'll give you one. I'll give you one. You got
Okay.
one.
Okay. Which one did I get?
So with the two goals, a little bit more granular. So this is how they set their monetary policy. So the two goals, which are known as the dual mandate, is maximizing employment So
Oh,
keeping unemployment as low as possible
okay.
and stabilizing prices, which is what you alluded to
With
with
inflation.
you can't set inflation, but you can try to control it, curb it when you need to.
That's interesting that the Fed's goal is to maximize employment. That's a very interesting mandate from a central bank when because the policies that they set or the rates that they set influence the hiring, the employment, the opportunity, the ability to buy and purchase, and consumer spending. Okay, got you.
There you go. You get yeah, you're putting the concepts together. I like it. I like it. So yes, those are the two goals: maximizing employment and stabilizing prices, which is known as the dual mandate. So you can
Mm-hmm.
use that Snapple fact out there, all the people, and, go into the barbershop with that one. So now the group of people responsible for following this mandate is known as the Federal Open Market Committee, which I mentioned just a little bit ago.
Mm-hmm.
So these are made up of 12 members. So seven of them are known as the Federal Reserve Board. So these are people who are nominated by the president and they can be confirmed by the Senate for up to two terms. Each term could be up to 14 years. So, they're nominated and confirmed just like other sorts of, cabinet positions and things like that.
Mm-hmm.
But they have a pretty decently sized term, 14 years. That's a long time. So if you get two terms, that's quite a bit of job security right there. Um, well, allegedly, go back to the Lisa Cook thing. So 14-year terms. And it's also they have to be replaced as well. So their replacement has to be confirmed when they are replaced. So it could potentially be a little bit more than 14 years. But so those are the seven members of the Federal Reserve Board. So the other five members. One of them is the president of the New York Federal Reserve Bank, which is the only Federal Reserve Bank that has a permanent role on the committee. And the other four members are made up of presidents of the other 11 reserve banks, and they have a rotating system. Every year they rotate. So that's the Federal Open Market Committee. Those are that's the group that sets the policy. They sort of give the direction of the economy and give their opinion on what they think, where they think it's going, and they're the ones that decide to cut the rate or increase the rate, decrease the rate, keep the rate the same.
Mm-hmm.
Now the man most of you might see or recognize on TV all the time is the chair of the Fed board, and that is Jerome Powell. And he's the one that gives the update on the economy and speaks
Right.
on whatever decision the board agreed on after each meeting. Um, the decision most people look for, again, is the setting of the federal fund interest rate, which is the interest range. It's a range that the Reserve Bank sets for the lending of reserve supply. It sounds like a lot, right? So we know that banks need a supply of cash, a supply of money in order to maintain their operations. And when they close, they will lend money between each other and the Federal Reserve Bank so that they can stay in good order for the next business day. Um, and that's where, again, the role of the Federal Reserve Bank as the central bank comes in. So this is what is called the overnight rate in banking systems all over the world. And again, so here in America, it's known as the Fed rate here. But you can call it anything, Fed rate, overnight rate, same thing. So because this is the interest rate that most banks use to lend between each other, this is also what influences consumer interest rates for everything from mortgages, auto loans, equity loans, CD interests, high yield accounts, everything. Vicky mentioned a lot of those last time as well. Um, After the meeting, the committee will either increase the rate, decrease the rate, or decide to do nothing, which they haven't done anything up until a couple weeks ago. That was the first time they did anything this year. And I think it was over a year since they raised the rate or lowered the rate. Um, Again, it's to abide by. Oh, sorry. So what would the committee choose to do, or or why would the committee choose to do anything with the Fed fund rate? Why would the committee choose to increase the rate, decrease the rate, or do nothing at all? What would you say to that, George?
I mean, I think it would depend on what's happening in the economy. If
Hmm.
there's, you know, if consumers aren't spending, it might be to inspire consumer spending to increase the goods and services and uh,
Yep.
to improve the economy.
Yep, and this is actually what you explained earlier as well. So again, it's to abide by this dual mandate of maximum employment and price stability. So price stability is heavily influenced by inflation, which is the rising cost of good over time. Um, so when the demand for goods is higher than the supply of goods, the price goes up, right? Um, a lot of you out there, you probably went out on the weekend, went to the club. The when the club prices increase after a certain hour because you're going to put so many more people in there, it's inflation. Same thing. Same,
Yeah,
same,
or we
same
could look at surge pricing on your favorite
time. Yeah.
demand car ride service.
Yeah, that's the super inflation. That's what that is. So anyway, the when the demand is for goods is higher than the supply, that rate of increase is for the prices gets really high. The
Right.
Federal Reserve will increase their rates. And now you're probably thinking, if the inflation is high, why would the Federal Reserve increase their rates, right? Again, this isn't just what they think the rate should be. As the central bank, they're the ones that are lending out to all the other banks as well. So when they increase their rates for their overnight spending, all of the other rates for everything else increases as well. So that makes borrowing from banks and borrowing mortgage rates increase. That makes auto loan rates increase. It makes them all more expensive. And it'll reduce spending. Not many people want to buy a car when the rates are high, right? So now you're reducing spending. On the opposite end, in times like what we're seeing today with unemployment rising, the Fed will choose to lower interest rates, which is what we've seen, in order to increase spending, making borrowing less expensive, which all of that together, it stimulates the economy. It entices companies to expand and hire more employees, and thus lowering the unemployment rate. So when it comes to the Federal Reserve and the things that they can do, one is affecting or changing the federal rates. And the other thing is money supply as well. So that also plays into, supplying goods, right? There's less money in the economy. They're going to hold on to their money tighter. If there's more money, people are going to spend more of it. Last question for you, George. Last pop quiz. Do you know what the rate of inflation and the rate of unemployment that the Fed considers its target?
um, I would say, okay, the rate of inflation. Give me a range.
Whew. Um, so I will say that on average historically, inflation has been maybe a little bit over 3% for the last however many years.
Okay, so
So you're looking, that's around that range, around there
I
for
would
inflation. Unemployment, believe right now or the latest that we've seen was 4.3.
is
Um,
for unemployment.
yep, unemployment on the higher ends, like a handful of years ago with COVID, we seen
I would
was it 11, 14% unemployment. So
I
that's as high as that it could get up there too.
All right, so I think the target rate for I think full employment I would say is about 2 to 3% unemployment, and I would say inflation at 2%.
You once again, you got 50%.
Okay, okay,
Yes, so the target for inflation is 2% year over year.
okay.
And the target for unemployment is
I was
4.1%.
gonna say 4%,
It's
but
you were
I took
close.
it. I mean, I literally had in my mind before you said anything. I was going to say 4%, and I doubted myself and lowered it even further
So
because I
lesson for the people. You
remember
gotta when you feel it in your gut, you gotta.
I was good because I was like, well, 4% is usually considered full employment.
Mhm.
Like, I
Yep.
mean, I know that sounds crazy. 4% unemployment is considered full employment. I know that
Hmm.
doesn't make sense, but
Yep.
that's what I've always remembered.
I know a lot of people, a lot of listeners out there are probably like, those are, it seems like pretty arbitrary numbers for what, the government sort of sees as the favorable thing. But I mean, that's a lot of, you got to think these are some of the strongest minds
And
in economics. Um,
and we should point out too, Michael, that that's in the aggregate. Doesn't If you break it down demographically, obviously we
mhm.
know that
Yes.
some groups within that demographic, Black folk in particular, see higher rates than that 4% on the average, right? So, and but I just wanted to make that point that
Oh yeah. And
that's the
actually we
yeah,
can get further into that on the next episode. But yes, so 2% inflation, 4.1% unemployment. That is what sort of this think tank of economists have decided is the favorable conditions for a country that's growing at a healthy rate. So that is what the Fed rate targets. And like I mentioned, where we are currently, the Fed rate, they decreased it by 0.25%. So it currently sits at a range of between 4% and 4.25%. So pretty almost double the target of where we want to be. And the last jobs report in August was 4.3% unemployment, if I remember
uh,
correctly. So also higher than where we want to be. And unfortunately, because of dealing with the last half of this week with the government shutdown, we were
right,
supposed to get the jobs report,
right.
but it is unlikely that we're going to get that anytime soon. So I don't even know if we're going to get that, and if the government didn't shut
And
down.
and
There's a
can we
lot.
and can
There's
we
a lot
even
going on.
trust that data because they didn't like the last guy's numbers and they fired him.
That
So,
it was a woman actually, and
uh,
actually last week as well, the Trump nominated person was they withdrew his nomination
right, right.
because they pulled up his tweets and he was I'm not even gonna try to allude to some of the things that he was saying, but he was on one. So they got him off. They got him out the paint. He is no longer up for that position. For a lot of the people out there that they were joking, last year when we were kind of sounding the alarm bells about Project 2025, and people were like, "Oh, you're overblowing it. That's not real. This is a thing like that." The last evaluation I seen, last report, Project 2025 had completed just under 50% of all the things that were in it. And that last nominee for the Board of Labor Statistics that we were just talking about, he is part of the Heritage Foundation, which is the organization that produced Project 2025. So very clearly, there's still, something that Trump didn't know anything about. Somehow we are still halfway through all the things that they said they were going to do, and
All
it's
right,
only been what, nine
all right.
months.
Let's
But
wrap this
anyway,
up, my brother.
anyway, join us next week. We're gonna go over some of the things George mentioned at the end there. We're gonna go over what the rest of the outlooks looks like. But until then, I mean, my goal was just to make you all a bit more aware of what we discuss up here all the time. And if you learned something today, then that's a win in my book. Now, if you want to explore how you can possibly win in your book as well, give me a call at 315-748-5540. Again, that's 315-748-5540. Or shoot me an email at michael.jennings@brackensfsn.com.
Mike Jennings is a wealth advisor with Brackens Financial Solutions Network, LLC, and a registered representative of LPL Financial, member SIPC. He is your friendly neighborhood advisor.